Give me a sentiment check on Bitcoin, the market, macro, etc. Like, how you feeling right now?
Yeah, I don't think we've talked since Bitcoin nuked on the weekend. What was it, 2 weeks ago? That was fun. Got some liquidations, some volatile price action after some consolidation. I'm feeling good. I think a lot of people were expecting Bitcoin to go parabolic, including myself. I'm on the record for saying that. But I don't think the structure of I guess this bull market or what Bitcoin's going to do in the coming months and years has really changed at all. It's just, what Bitcoin does kind of takes the path of Max Payne.
All right, let's look backwards before we kind of look at where we are right now. Walk us through kind of your understanding of, we absolutely busted through all-time highs, went to $69,000, nice, and then we've drawn down into the 40s. What's driving a lot of that? Is that macro shock? Is that just pure liquidations? Market got too frothy, too much derivative stuff? Like what's really driving that drawdown?
Yeah, I mean, so a lot of it is that, derivatives or, traders, speculators were out of position. So you have the underlying spot demand for Bitcoin. You have people like yourself, like, the listeners of this show, people going out and just buying Bitcoin on Cash App or Strike or Coinbase or whatever it is. And they're exchanging fiat for dollars. And then there's kind of speculators that can use Bitcoin, they can use other cryptos, they can use stable coins, and they can basically on margin or with leverage bet on the price of Bitcoin to go up. And if you see too many people kind of off sides doing that at once, essentially, when the price broke 69,000 or briefly tapped it there, a lot of the market was levering up. And so you kind of see even traders that are bullish on Bitcoin, whales with a lot of capital, who are long-term extremely bullish on the asset, will try to get those, and successfully did get those traders liquidated, make them forced sellers. And so that's kind of what a lot of this price action is recently. I think some of it has to do with a little bit of macro uncertainty. The Fed is starting to taper. I included some charts about Eurodollar futures and the Dixie, which we can talk about in a minute. But I think there is some sort of risk off sentiment in markets. We saw the VIX, which is the volatility index for the S&P, spike right before that massive weekend liquidation a couple weeks back, hit I think 35, which was the highest it had since January of this year. So there was more of just a risk off element. It wasn't just Bitcoin, but I think that's getting priced in and has been getting priced in for the last week or two.
All right, let's talk about now. We've got Bitcoin realized price, and currently the market cap sits at about 892 billion, which newsflash is below $1 trillion for those keeping track at home. But the realized cap's only 461 billion. Tell us kind of what you think this is showing us.
Yeah, so I kind of color coordinated this chart over time, and you can kind of see realized price. It's like almost like a non-volatile Bitcoin chart, right? It's not as much of a boom and bust, and more just kind of a steady uptrend with these big reevaluations every highlighted in green. And so the green is basically a bull market, and that's when the realized price, this orange line, is curving upwards, going parabolic. And so realized cap or realized price, realized cap is basically the aggregate of every UTXO or every Bitcoin technically on the network when it was last moved. So that's kind of, I like to call this like almost not an intrinsic value, like maybe a subjective value of Bitcoin on the network. And we can see this with full transparency. And so basically realized cap or the realized price has been somewhat of a bear market floor. You've seen it cross under that a few times throughout history, and that's been generational buying opportunities. But I think realized cap, realized price is like the most pure form of kind of quantifying the monetization process of Bitcoin. And so right now we're kind of in this consolidation phase where realized cap is appreciating to the tune of about 700 million since the bottom of the market in May or in June. And so, we're still increasing, but we're not seeing the tens of billions, hundreds of billions of dollars of inflows into the market, which would, need the price, which we'd need to see for the price to go parabolic.
Okay, and then what about taking this exact same realized market capitalization, but doing the 14-day moving average? You've got these really fancy arrows that you drew on here. What was this showing us?
Yeah, it's just the same chart, just zoomed in a little bit. You can kind of see what's happening in a closer view. And so I put the 14-day moving average just to kind of smooth out some of the volatility. But what you see is the slope of that realized cap or that realized price increase is kind of showing these market phases. So the reason that that realized price or realized cap goes kind of vertical is two reasons. As one, old coins are selling, but it's really that's because of the first reason, which is there's so much capital, there's so much new money flooding into this market, flooding into this asset class. And so you get a combination of those two, you get basically a green bull market. You see this, realized price appreciate by maybe an order of magnitude or two. And so we're not in that kind of green phase yet where we're seeing these massive capital inflows. But I think the catalyst is what's to come in potentially 2022 or later. But and that's kind of the macro uncertainty and the macro situation that we're seeing play out in real time.
Okay, before we move on to the next chart, I want to go back to the zoomed out version, the first chart that we showed. And again, I'm not a genius, but I can read colors. And every time I see yellow, it's followed by green. I never see yellow, then red. Is that a rule? Is there any like a way else to read into this? Or do you always get green after yellow?
Yeah, I mean, that's historically, that's what we've seen. The red means essentially that there's on-chain losses, there's realized losses. So a coin's acquired in 2017 for 20K on-chain, and you can see this with full transparency in the Bitcoin UTXO set. Anybody can spin up a full node, download the entire history of the network, and see this happening. And that coin later moves for, say, $3,000 in 2019. That's a realized loss. There was a $17,000 loss on chain. You can, if it was one Bitcoin, this is just an example. And so when you see basically like say at the top of the market in 2017 to the bottom of the bear market, the realized cap decreased by like the realized price decreased by like $1,000. And so basically the whole time, that whole 80% drawdown, it was just coins transferring hands, and a lot of top buyers were transferring those weak hands or transferring to strong convicted hodlers. And so, yeah, I think the yellow is always followed by the green because I labeled it accumulation / pre-parabola. And that's just kind of what you see is that, just steady increase. That plateau or, a slight uptrend. That's kind of the, mark of accumulation trend. And then following accumulation, that's usually when Bitcoin goes parabolic, but, history rhymes, but, doesn't repeat.
Let's see what happens.